Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla, let's go over the market, and let's figure out what is happening today. Pretty big day tomorrow. We have CPI coming in tomorrow as well, so that's gonna be pretty important. I think expectations are around 3%. Don't quote me on that, I double check that, but CPI is coming in tomorrow. It's all that really matters. The market will react to it the way it'll react to it, and hopefully things go pretty darn well. I think it will. I'm hopeful, I guess is the way to say, but as usual, we'll see. Now, with that being said and done, let's jump into it. If you enjoyed the video, don't forget to hit that like button. It does help a lot. This is not financial advice. I am not a financial advisor. And of course, my membership section on YouTube is live. The link is down below for just $3 a month. You get access to my updates, thoughts, posts, options flows, etc. throughout the day as Tesla is trading, as the market is open. So link is down below. We're at about 300 members right now, which is awesome to see. So again, if you're interested, link is below. But let's just jump into a Tesla closing in just a few minutes here, but down about, we'll say 2.6% on the day, closing at about $188.50 per share, which obviously compared to the market is a bit of an underperformance, or maybe more than a bit, but an underperformance nonetheless. Now, let's talk about what this means. Now, I do want to, kind of say that it does sort of hinge on what happens tomorrow with CPI, because CPI is a pretty big thing, right? We have PPI on Friday as well. So, some pretty decent inflation reports coming out that are important to see how inflation is doing and how the Fed will potentially react regarding interest rates moving forward relative to how these inflation reports are looking. As long as they're at the very least in line, if not ideally better than expected, I think we're in a good spot, especially for Tesla here, because it's a very interest rate sensitive stock. So there's a lot of juicy information to go over here. Now let's talk about a few important things. I want to look at a more broader picture over here, but before we do that, I guess let's jump into this more like micro time frame here. So let's go to the 4-hour chart. So the way I look at it is this. So there's a few ways that you can look at this. First and foremost, obviously, like I talked about, we were in this channel. We did break out of it. There is a chance, and you can make an argument that we did break back into it. So there's two ways to look at it. One is this way right here. The other way is if you take the bottom of this channel and you simply clone it and then put it right on top of where this top channel was right here, you can make an argument that we fell back into the channel as well. It really depends on the perspective and how you personally like to do it, because this is one way where this channel, the top is essentially parallel to the one down here. Put it at the top, bam, that's your channel. The other option is, of course, and the way I personally like doing it a little bit more, if I had to do it myself, and because these are the channels I see some other people doing, and I kind of overlay them just to see their perspective as well, which is valid. Don't get me wrong. My personal preferred way to do this though is going to be what this channel looks like, and the reason for that is because it touches more candles. I like to touch as many candles as possible when I do these kind of channels, ideally, because that gives the channel more validity, because clearly the candles have consistently been touching and rejecting at those points until finally it broke through. And so far it also lines up with this still potentially actually just being nothing more than a retest. So far so good. That's looking pretty decent. Now, if the channel perspective that you like to look at is this one that I already mentioned, which potentially signifies that we did fall back into the channel and so far are getting rejected from exiting back above the channel, which is also a plausible theory, this definitely opens up the potential, like I said before, to potentially come down to about that 182-ish, of course, level per share, which is going to drop us back down to make the right shoulder of this potential, like I said, inverted head and shoulders pattern. We have the left shoulder here, we have the head here, we have the potential right shoulder here. If we do come back down to, again, around that, 182, 183, somewhere around there-ish level. But all in all, even if that were to happen, all I think is going to do is just give the MACD a time to cool off a little bit. The RSI will get a little bit of a reset, if you will. And I think from there, it's just going to be not financial advice, just my opinion, a potential buying opportunity, and we can rally on from there regardless. So that's just kind of the way I'm personally looking at it right now. Obviously, we'll see if that's the way it actually plays out or not, but just a perspective. Now, let's take a look at a bit more of the broader picture. The main thing I want to look at is this. So ultimately, like I said, we did break out of this downtrend, which is this yellow line. So far, so good. We came up, pretty much got rejected almost exactly at the level I've been talking about. That is potentially the most important level to break, just because it's just a simple, strong resistance that we did have a support back here. Now resistance, which is exactly what we're rejecting off right here, 194, 195. But it's even more important than that because, well, it potentially signals a short-term to medium-term potentially trend shift, because now this downtrend, even though we technically slowed down the downtrend substantially by breaking out of this yellow line, so we're not in a substantial downtrend anymore, to really truly change the sentiment from being bearish to maybe kind of neutral, which is kind of where we're in right now, to potentially now bullish, is changing the overall trend, which is going to be essentially making a higher high, which currently would require us to break an ideally close above 194 to 195, and that's looking pretty good if that were to happen. I still think it will happen because the RSI still looks good to me on the daily chart. The MACD still looks good on the daily chart. So ultimately, things are still looking pretty darn good. No real complaints over there. But the thing I want to pay and draw your attention to is going to be a couple of things. First, I want to draw your attention to the similarities between this current move that we're experiencing right over here to the move that we pretty much had all the way over here, right? Maybe we had this massive, we had a rally, we had a bottom signal here, right? So again, don't forget, these drawdowns have all been pretty much the same. They've all been about 30%. From here all the way down to here, 30%. From all the way here at 280 all the way down to this bottoming over here at about 190, we'll say 30% roughly. And same thing here. This move has been also about slightly more than 30%, but like 32% or something like that from the top here to the bottoming here. So that's interesting. But from the way we're bottoming and so far trading in this area, it's extremely similar to the way we bottomed and traded in this area. Massive fall, gap down, gap down. Looked like a potential bottom, looked like a potential bottom. We had a bit of a rally from it. We had a bit of a rally from it. JK, we went even lower over here, right? You can see we made a lower low to actually truly test the trend line. Exact same thing. JK went down even lower and ultimately made a lower low to test the trend line. Exact same scenario. Beautiful little quick rally almost instantly. Beautiful quick rally almost instantly. Topped out pretty much at the same level that we were back here. Topped out pretty much at the same level we were back here. Went sideways a bit. So far we're going sideways, if not down. Then we did go down substantially, not substantially, but we went down a decent amount, which if we were to replicate this move again, you can make the argument that today is that move. But in my opinion, it's still plausible to come down to about like that 183-ish level like I talked about for that, right shoulder, which would be essentially this move into a massive bottoming signal. And then we continue rallying from there. And then potentially that's exactly what we have coming up, maybe even tomorrow with CPI potentially. So again, very, very, very similar looking movement, right? It's bottoming out in such a similar fashion. But again, ultimately, the technicals still look good with RSI and the MACD. Another thing I want to pay attention to very closely here is going to be this. So TrendSpider, which is what I used to trade, the link is down below if you're interested, actually posted a pretty interesting setup on, on Saturday. Pretty interesting. This Tesla strategy enters long when the daily RSI closes back above 30 after a previous close below. It then exits about 15 candles later over the last 2 years, plus 62% total return versus a negative 31 buy and hold, plus 7% average return per trade. And it just took an entry on Thursday, which was this candle right here. Now, if we open up this overall chart, you can see, right? You can't really see because my camera's blocking it, but you can see they kind of over here showed that, the signal was triggered to enter long. If we look at it over here, you can see, if you kind of look really, really close, and maybe I'll zoom in a little bit so you can kind of get a better picture here or something. I don't know. It's not zooming in very well. Let me go ahead and just cancel whatever. The point I'm trying to make here that you can see pretty obviously is this. You can move, you see the move down, which is exactly what we're experiencing, because don't forget, they entered on pretty much right around here. And then even in this algorithmic trade, it's predicting a little bit of a drawdown before the real move truly starts, right? And that's exactly what we're seeing right now, with potentially a little bit more to go, again, to about 183 or so, followed by the move that moves upwards. This move right here will pretty much bring us right exactly to pretty much this gap fill of earnings, which is exactly what this brings. We kind of go sideways a little bit, do our thing, right? And then we ultimately break up even higher. And this pretty much brings us almost to that overall level I've been talking about that I personally think we can potentially reach, which is going to be somewhere around the 220s to potentially low 230s-ish level to retest these trend lines on the weekly, for instance, which is exactly where this current algorithmic trade predicts the overall movement to go and to play out within a couple of weeks or so, 2 to 3 weeks, we'll say roughly. Again, also around that level. So it looks pretty similar to what I'm personally projecting to happen for Tesla, again, in the next 2, maybe 3 weeks, something like that. And it's looking pretty darn good. I'm just saying, it's looking pretty interesting. It's looking pretty good. I don't know. It just makes sense. Obviously, as usual with everything, things have to be taken with a grain of salt. The market will potentially, due to things that maybe you won't expect, let's just say that. It's all about a probabilities game, but it's not looking that bad. It's looking potentially pretty promising. And this is roughly the move I am currently projecting. Potentially right shoulder, get a bottoming here, rally back up, earnings gap fill, kind of go sideways, maybe zigzag a little bit before the next move as we build up, steam, if you will. And then we move up even higher again to retest the 200 moving averages, retest potentially even the 230 level over here, as you can see, right? This level over here that we found a lot of support, and we just broke right down through it, never really came back to test it, which is where the 200-day moving average is. Or maybe we just get a move only up to about 220, which is where the 200 moving averages on the weekly to retest the trend lines. Regardless, I do think that somewhere around that general level really wouldn't shock me if we retrace somewhere to there within the next, maybe by end of the month, something like that, right? Really wouldn't shock me. But ultimately, that's kind of what I'm seeing. In terms of options flow, nothing too crazy came in. for the most part, a pretty boring day for options flow. Nothing absolutely wild. One of the biggest ones I've seen was this 800K call that came in not that long ago, about half an hour ago, for 240 calls for Tesla. They came in, again, 800K premium, 240 calls for July 19th. So pretty bullish, pretty out of the money. It is pretty safe. It is obviously, you know, like 6 months out roughly. But, you know, it's pretty good, pretty bullish in my opinion, and not too bad of a trade. So that's really the only thing I saw that's worth of note. But yeah, that's pretty much it for the video. So as usual, if you guys enjoyed the video, don't forget to hit that like button, as it does help a lot. And yeah, I'll see you tomorrow with CPI coming out in the morning tomorrow. Should be a pretty important read, which should impact the way Tesla decides to move pretty much moving forward from here. So yeah, with all that being said, thanks for watching. I'll see you tomorrow. Peace.